discuss second session of PGBP, Profit and Gains of Business and Profession. So in the session 1 we discussed some basics about the PGBP. We discussed section 28, we discussed section 145, method of accounting, and we discussed what are the income which shall be taxable under the head of PGBP. So today we shall discuss section 32, depreciation. So in the last of the previous class we had started what are the deductions which are allowed to be debited to the profit and loss account. So in that sequence now we shall discuss section 32, depreciation. So depreciation is the reduction in the value of an asset due to normal wear and tear and due to obsolescence over the useful life of the asset. So if we use the fixed asset, there will be some type of wear and tear, and that wear and tear is known as depreciation. So in income tax, method of calculating depreciation is different in comparison to financial accounting. So there is a totally difference between the method of calculating depreciation under income tax and method of calculating depreciation in financial accounting. So we will chart depreciation as per the provisions of section 32. Now we shall discuss some general principles for computation of depreciation. Point 1. Depreciation is allowed on all type of assets, whether tangible or intangible. So it doesn't matter whether asset is tangible or intangible, we can chart depreciation. Point 2. Depreciation is allowed to owner or co-owner of the asset only. So depreciation shall be deductible for the owner or co-owner only. If the person is not the owner of the asset, then depreciation shall not be charged. Point 3. Asset may be owned partially or fully by the SAC. Point 4. Depreciation is allowed if asset is used for the purpose of business or profession. That means if asset is not used for the purpose of business and profession, then depreciation shall not be allowed to be debited to profit and loss account. Point 5. Allowed on the basis of the actual cost to the owner. So depreciation shall be calculated on actual cost to the owner. Point 6. Allowed on block of assets. So depreciation shall be charged on block of assets, and block of assets we shall discuss in subsequent slides. Point 7. Allowed on written down value method. In case of power generation undertaking, straight line method may be used. So normally depreciation is allowed on written down value method, but in case of power generating undertaking, straight line method may also be used, and discuss this point in the subsequent slides. Point number 8. Computed on written down value method of the asset on the last day of the previous year. Point 9. The asset must have been used for the purpose of business during the relevant previous year. So asset must be used for the purpose of business during the relevant previous year. Point 10. Depreciation shall be allowed if asset is put to use during the year of purchase. So this is important point which you should keep in mind. So depreciation shall be allowed only if the asset is put to use during the year. So what is the meaning of put to use? Put to use means actual use of assets and also includes making an asset ready for use. So if you have purchased a fixed asset and if you have not started using that fixed asset, then depreciation shall not be debited, shall not be allowed. So put to use means actual use of asset, assets must be used, and it also includes asset, making the asset ready for use. Point number 11. If an asset is purchased during the previous year and put to use is for less than 180 days in that previous year, then depreciation shall be charged at the rate of 50% of normal rate of depreciation. So if asset is put to use for less than 180 days, then half rate of depreciation shall be charged on that particular asset. For example, if an asset is purchased on 1st November 2020 and put to use on same day, then asset is used for 151 days from 1st November 2020 to 31st March 2021 during the previous year, then half rate of depreciation shall be allowed. Point number 12. If an asset is purchased during the previous year and put to use is in the subsequent previous year, then full rate of depreciation shall be allowed. So if you have purchased the asset in the current previous year and you have not started using that asset in the current previous year, and in the next previous year you have started using that asset, then full rate of depreciation shall be allowed. Point number 13, if an asset is sold, discarded or transferred, then there shall be no depreciation in the year of sale for that particular asset. So, if you have sold some asset in the particular previous year, then there shall be no depreciation for that asset. So, block of assets is defined under section 2 subsection 11. So, block of asset means a group of assets falling within a class of assets and having same rate of depreciation. So, block of asset means same type of assets on which we are incurring same rate of depreciation, then we will add all those assets in one block, and that block will be known as block of assets. And assets can be tangible assets being buildings, machinery, plants or furniture, and intangible assets being know-how, patents, copyrights, trademarks, license, franchises or any other business or commercial rights of similar nature, in respect of which the same percentage of depreciation is prescribed. Now, there are some rates which is defined under Income Tax Act. On the basis of that rate, we will charge the depreciation. So, classes of assets. So, there are 4 types of asset which is classified as building, furniture, plant and machinery and intangible assets. So, in Income Tax Act, assets is classified into 4 types. First is building, next is furniture, then plant and machinery and intangible assets. And rate of depreciation is also defined under the act, which is as follows. So, classes of asset. First is building. So, there are 3 groups in building. Group 1. So, building for residential purposes except hotels and boarding houses, the rate of depreciation shall be 5%. Group 2 under building, buildings other than covered in block 1 and 3 and not used mainly for residential purposes, then rate of depreciation shall be 10%. Group 3, buildings, temporary erections such as wooden structures shall be charged at the rate of 40%. Next type of asset is furniture and fittings. It is under group 4. The rate of depreciation is 10%. So, furniture, any furniture oblique fittings including electrical fittings, rate of depreciation shall be 10%. Third type of asset is machinery and plant. So, we have many groups in machinery and plant. For example, group 5, in group 5 plant and machinery, any plant and machinery not covered by block 6, 7 and 8, motor cars other than those used in a business of running them on hire, acquired or put to use on or after April 1st, 1990, the rate of depreciation will be 15%. In group 6, plant and machinery, ocean going ships, vessels ordinarily operating on inland waters including speedboats, then rate of depreciation shall be 20%. Next, we have group 7, plant and machinery. In group 7, the rate of depreciation is 30%, and in group 8, we have many assets like aeroplanes, commercial vehicles, specified life saving medical equipments, containers, new commercial vehicle, computers, books, gas cylinders, energy savings devices. These all are depreciated at the rate of 40%. Next, we have air pollution control equipments, wooden parts, cinematograph films, match factories, tubes, salt works, books owned by SSE carrying on a profession being annual publications, books owned by SSE carrying on business in running, lending libraries, and finally air pollution control equipment. These all are depreciated at the rate of 40%. Fourth type of category is intangible assets, group 9. So, intangible assets like know-how, patents, copyrights, trademarks, licenses, franchises or any other business or commercial rights of similar nature, then the rate of depreciation shall be 25%. So, we shall charge depreciation on the basis of these rates only. Next, we have method of calculating depreciation, which is defined under section 43 subsection 6. So, the method of computing depreciation is mentioned under section 43 subsection 6 of Income Tax Act, which is as follows. So, first of all, we will take written down value of the block of asset in the beginning of the year. So, written down value of the block in the beginning of the previous year. Then we will add actual cost of asset acquired and put to use during the previous year. So, if some asset is purchased during the previous year and it is put to use in the same previous year, then we will add that value in the WDV of the block in the beginning of the previous year. Then we will deduct any asset which is sold during the previous year. So, amount received or receivable for the assets sold, discarded, demolished or destroyed during the previous year. After that, after deducting the asset sold, we will have written down value of block on which depreciation shall be calculated. So, we shall calculate the depreciation on this value. So, this is the method of calculating depreciation which is defined under section 43 subsection 6. Now, let us take a question on depreciation. So, depreciated value of the block of assets of Dhruv Private Limited consisting of machinery A, B and C. So, there is a block of assets in which we have three type of machinery, machinery A, machinery B and machinery C. On 1st April 2020 is 25 lakh. So, WDV of the block in the beginning of the previous year is rupees 25 lakh. Addition of machinery D was done on 1st September 2020 for rupees 3 lakh. So, Dhruv Private Limited purchased a machine D on 1st September 2020 for rupees 3 lakh, and this machinery was put to use on 8th September 2020. So, this machinery was purchased on 1st September 2020 and it is put to use on 8th September 2020. So, you can see that if asset is put to use on 8th September 2020, that means asset is put to use for more than 180 days, then full rate of depreciation shall be allowed. Next, we have cost of machinery E purchased on 24th December 2020 was rupees 5 lakh. So, the asset which is purchased, the machinery which is purchased on 24th December 2020 was rupees 5 lakh. Machinery A which was originally purchased on 1st April 2004 for rupees 1,80,000 was sold on 3rd March 2021 for rupees 25 lakh. So, one asset which was in the beginning of the previous year, it is also sold for rupees 25 lakh on 3rd March of 2021. Assuming that the rate of depreciation on machinery was 15%, find out the admissible depreciation for the assessment year 2021-22. So, in this question we have one asset in the beginning, then we have three assets in the beginning, machinery A, B and C, then addition of machinery D was done for rupees 3 lakh and addition of machinery E was done for rupees 5 lakh. So, we had three machines in the beginning of the year and after that we purchased machinery D and machinery E and we sold machinery A on 3rd March 2021. Now, we shall see how depreciation will be calculated. So, first of all we will write down WDV of block as on 1st April 2020. So, WDV of the block in the beginning is 25 lakh which consists machinery A, B and C. You can see machinery A, B and C is in the beginning of the previous year. Then we purchase machinery D for rupees 3 lakh, it will be added to the value of rupees 25 lakh. Then we purchase machinery E which is put to use for less than 180 days. So, keep in mind machinery E was purchased on 24th December 2020. So, it is put to use for less than 180 days. That means, we shall charge depreciation at 50% or half rate of depreciation shall be charged. So, machinery E is purchased for 5 lakh. So, total purchase amount of machinery D and E is rupees 8 lakh. So, we will add this value of rupees 8 lakh in 25 lakh. Now, we shall deduct if any machinery is sold. So, machinery A is sold for rupees 25 lakh less assets sold during the previous year, machinery A 25 lakh. Then we have closing value of the block as on 31st March 2021. So, on 31st March 2021 closing value of the block is rupees 8 lakh. Now, depreciation shall be charged on rupees 5 lakh. Depreciation will be charged as half rate of depreciation So full rate of depreciation is 15%, half rate of depreciation is 7.5%, which is equal to 37,500. Then we have machinery E, which is equal to 3 lakh, and rate of depreciation shall be 15%. Full rate of depreciation shall be charged 45,000. Total depreciation is 82,500, and closing value of the block is 7,17,500. So we will not charge depreciation on machinery B and C because the sales value of that block is increasing the value of the block. So the closing value of the block after depreciation shall be equal to 7,17,500. So in that way you will calculate depreciation, which is totally different from accounting. Now some other important points which is related to depreciation. Point number 1. In case of acquisition of any depreciable asset in respect of which a payment or aggregate of payments made to a person in a day otherwise than by an account pay check, account pay demand draft, or use of electronic clearing system through a bank account exceeds rupees 10,000, such payment shall not be eligible for depreciation. So that means if you are making payment in cash which is more than 10,000 in a particular day for purchasing the asset, then depreciation shall not be allowed for that amount. So this is to promote online transaction, or this is to promote payment through banking channels. But however, there are certain exceptions to this rule. So some exceptions are also there for this rule. Point number A, if WDV of the block of asset is reduced to 0, the block is still exists. Point B, a block of asset is empty or ceases to exist on last day of the previous year, WDV is not 0. Point C, imported cars. Point D, if in the first year of acquisition asset is put to use for less than 180 days. Point E, in case of amalgamation, succession, business reorganization or demerger. So in these cases this point shall not be applicable. Now come to the important point number 2. In case written down value of block has been reduced to 0 on the last day of the previous year, but the block of asset does not ceases to exist, then there shall be no depreciation allowed. Important point number 3. If all the assets in the blocks are transferred and the block has become empty on the last day of the previous year, then there shall be no depreciation charged. So these are some important points which you have to keep in mind. Now we shall discuss some special cases in relation to depreciation. So depreciation allows for special cases. Case number 1, depreciation in case of power units. So here power units means an undertaking which is generating and distributing power. So section 32 subsection 1 clause 1, an undertaking engaged in the business of generation and distribution of power can use any one of the method of charging depreciation. So there are two types of method, straight line method and written down value method. So in case of generation and distribution undertaking, any method can be used. The first one is straight line method. So in case of tangible assets, at the percentage specified in the income tax rules on the actual cost of individual asset. If undertaking is using written down value method, then like any other assessee, option should be exercised before the due date of furnishing return of income. Once opted, it will apply to all subsequent years. So in case of generation and distribution of power, undertaking has choice either to go with straight line method or written down value method. Next is special case number 2, additional depreciation on new machinery or plant, which is defined under section 32 subsection 1 clause 2a. So if an undertaking has purchased new plant or machinery, then some additional depreciation shall be available. So the provision of section 32 subsection 1 clause 2a are conditions for claiming additional depreciation in addition to normal rate of depreciation is that undertaking engaged in the manufacture or production of any article or thing or generation, transmission or distribution of power, and it has purchased new plant and machinery, and new plant and machinery installed and acquired after 31st March 2005, then some additional depreciation shall be available. The rate of depreciation we shall discuss in next slide. Now we shall discuss some exception. So few exceptions are there where assets are not eligible for additional depreciation. First is ships and aircraft. Next, any machinery or plant which before its installation by the SAC was used either within or outside India or any other person. Point C, any machinery or plant which is installed in any office premises, any residential accommodation or in a guest house. Point D, any office appliances or road transport vehicles. Point E, any machinery or plant which is eligible for 100% deduction in the first year. If there is a machinery or plant which is eligible for 100% deduction in the first year, then additional depreciation shall not be available. So in point number A to E, additional depreciation shall not be available. Now we shall discuss how much additional depreciation is available. So additional depreciation will be 20%. So additional depreciation at the rate of 20% of the actual cost of asset acquired and installed after 31st March 2005. If asset is put to use for less than 180 days, then 10% depreciation shall be allowable and rest 10% shall be in the immediate next year. So the additional rate of depreciation is 20%. If asset is put to use for less than 180 days, then 10% depreciation shall be available in the current previous year and rest 10% shall be available in the subsequent or immediate next year. Next point, in case of acquisition of any depreciable asset in respect of which a payment or aggregate of payments made to a person in a day otherwise than by an account pay check, draft or use of electronic clearing system through a bank account exceeds rupees 10,000, then such payment shall not be eligible for additional depreciation. So again this point is to promote non-cash transactions. If new plant and machinery is acquired for setting an undertaking in notified backward area in Andhra Pradesh, Bihar, Telangana and West Bengal during April 1, 2015 to 31st March 2020, additional depreciation will be provided at the rate of 35% instead of 20%. The rate will be half if machinery is used for less than 180 days, that means 17.5%, and rest 17.5% shall be allowed in the immediate next year. So if the undertaking is set up in notified backward area in the states of Andhra Pradesh, Bihar, Telangana and West Bengal, then additional 15% depreciation shall be available, then the total additional depreciation will be equal to 35%. Next point, additional depreciation shall be allowed to be deductible while computing WDV for the next year. Case number 3, incentive for acquisition and installation of new plant and machinery in notified backward area in certain states. Section 32, capital AD. So intensive shall be equal to 15% of actual cost of new asset being eligible plant and machinery. Condition to be fulfilled, condition number A, any company or non-company SSE engaged in the business of manufacture of an article or thing or after 1st April 2015 in any backward notified area by central government in the state of Andhra Pradesh, Bihar, Telangana and West Bengal, acquired and installed new assets on or after 1st April 2015 and installed on or before 31st March 2020. C point, company can claim both deduction under section 32 AC and 32 AD if conditions are satisfied for both. So deduction shall be allowed in the year of installation of new asset. So incentive will be 15% of additional depreciation. Thank you.